Good evening, everybody. This is Stefan from TradingCandles.com with our disclaimer. We are not a licensed financial advisor, broker, or dealer. This video is for educational purposes only, and the viewer should do their own due diligence before making any financial investments. Today, we're just going to have a brief video on a couple of double tops with some candlestick patterns, including hammers, dark cloud covers, piercing lines, evening, and shooting stars. So let me go ahead and pull up our chart application. And thank you for being patient. On the 50-day moving average, a MACD set to 817.9. Again, if you're not familiar with the MACD, don't worry about that so much. Obviously, if it's going up, it's bullish. If it's going down, it's bearish. We are going to show you a double top with divergence, or a forming double top with divergence with some candle patterns inside of there. So what I'm going to do is zoom in here. Maybe zoom out a little bit to give it some more. There we go. Remember that candlesticks are pivot points or turning points. They come at the end of a trend, short-term or long-term. And they work much better when there is support and resistance at the level at which they are going to help you decide as to what's going on. So on this particular chart, we actually have a double top and a forming double top. So if we come back in this area, we've had this nice run up. We make a top here, and then we come down. We get this little Harami type thing, another little Harami, and then this nice candle up right here at resistance. Now notice this resistance. And then we get what's called a dark cloud cover. Usually a perfect one would gap up and come down, but it's closed greater than 50% of the way into that candle. Make it a little bit bigger. So, I would consider that a dark cloud cover for me. And if you notice, this high has a high here on the MACD, and there's a lower high on the MACD at this resistance. So this candle pattern here, which is the the dark cloud cover, has also been confirmed with this divergence. Now and I'll go ahead and write that in just so we can remember that while you're watching the cloud cover. Okay, so we have a dark cloud cover. Now this here is the midpoint of the double top. So we have, it's basically an M. It's down, up, down, and when it breaks this point, it officially becomes a double top at that point. Officially, it's only forming up in here. And just for fun, we'll just do a quick measuring technique to see if that actually plays out at all. And you can see it comes pretty close. The target after it broke below this would be actually this line right here, which we pretty much hit. So again, target measuring techniques work very well. Okay, so we have our first double top with Harami, dark cloud cover, diverging MACD, confirmation of double top by the break, and we run down here, get down to the bottom, and we get a Doji, and it's also really kind of a Harami because it's inside of this body. This here is another sort of Harami inside of this body, and this is actually another Harami inside of this body, and this is really another Harami again inside of this body as well as that body. So candles don't have to, I would still consider this a Harami even though it didn't come to this one. Now some people would say that's not true, but not everything is an idealized candle pattern. But we have basically 4 Haramis in a row. And then we continue to go up. We break some resistance here. We're going up, we're going up, we're going up. Now we get 1 Harami. We get 2 Haramis. Now we get the second high. So if you look at this as the first high, and then we get a Harami and a going up. Now we're not exactly, but we're pretty much at the high here. So we're at another resistance level. If we look just barely, I'll bring this up to show us better. But if you look at this high, we're looking at compared to this high, this right here is that high, and you can see that it's a little bit higher than that high. So again, we have a lower MACD than the previous high. Now this here again is another dark cloud cover type formation. Again, usually it gaps up, but it opened and ran up and came back down, and now it's proceeded back down. For this to be a double top to complete, it would have to break below this level here, and the measuring technique would probably break it down to this 125. And now I'll pull up XOP, which is gas and exploration, oil refineries. This is a little harder to see the double top, but we can see the run up and up to here, and we have this very high MACD here. We can see it run back down, and now it's run back up into that resistance area. And as you can see again, the MACD here is much higher than the MACD here, showing that traders are not willing to pay as much, as big of a premium price-wise as they were back here. Here they were willing to pay a much higher price in respect to the trading range, and here they're paying a much lower price. So it's showing a sign of weakness. We'll zoom in here. I believe this chart has a few nice patterns on it you may not be used to seeing. So we have our uptrend coming here, nice full candles, no wicks. We get a little pause, and it doesn't break the halfway point of this candle, so that's very good support. The halfway point of a large white candle, I wouldn't say this one's really large, but it's big enough, forms a support level. And as you can see, I'll draw it right in, this support level carries all the way from here, 1, 2, 3, 4, 5, 6, 7, 8, 8 touches. And you may as well count this as 9 and 10, honestly, in my opinion. Okay, so we've come up here, and now what we have hit is an evening star. We have a gap up, and then a gap back down. And then we have a gap up and a gap back down. I don't know if the volume supports that so much. Usually the volume on the gap up will be higher, and an idealized an idealized evening star would probably be a red candle here. But again, you know, we don't live in a perfect world. These patterns just need to be taken for what they really are, because nothing's perfect again. So not to repeat myself, but if you wait for the perfect candle, you'll be waiting a very long time frequently. So we have our evening star, we have this little pullback, this little consolidation, it finally breaks down. Now here again we have a hammer, and that's a really nice hammer right there. I'm going to go ahead and mark that off as a hammer. So we have a nice hammer, we have a second hammer, both of those bouncing off of support. Again, candles are much stronger when they are coming off of some type of support. And in this case, we have two hammers coming off of support. This candle is a bullish engulfing by engulfing not only this candle's body, but this candle's body. So this is very strong because it's encompassed two candles' bodies. Now, a lot of candle traders don't understand that many candles can make the same formation. So they might just look at this and say, ah, there's one bullish engulfing here, but no, there's really two bullish engulfings. It's really grabbed back 2 days of trading and closed on its high. And now it's continued to make a run up, and not unusual, a pullback to support. Here, our 50-day moving average is acting as support as it was back here. So this is respecting this line. Again, respect works well. So support runs up. We have a Harami. Goes down, we get, it's really kind of a piercing line. You know, as long as it goes 50% into that body and down, it's not a huge giant candle pattern, but it could be a piercing line. But anyway, we run back up, run up, and now we are at the previous high over here. And again, now look at the MACD here. Now look at the MACD here, much lower, as we discussed. And now this is a shooting star. And it is basically an upside down hammer at the top of an uptrend. Now, shooting stars are not as strong as a hammer which comes in a downtrend. I don't know exactly why, but the statistics do prove it out that it's not quite as strong, and you really do want that to come at resistance, and you really do want confirmation, which would be, you know, a close below the body of that candle. In an uptrend like this, I personally would not, you know, try to short this. I would be more inclined to take a position down here at the support level when it's going to go back up. When you have an uptrend like this, you know, on a ETF, there's 10 points here in a short period of time is actually quite a good run. So I would be hesitant, but if you are a counter trend trader, which people make money doing that, but you have to be very fast, very liquid, you may get a pullback down here into, you know, probably into this area here. And you can make a quick buck, you know, if you put a lot of cash into it. But anyway, those were, go ahead and type that in. You may want to print this out for a nice picture. Shooting star. It's actually a nice example of a shooting star. So if you are watching this here on YouTube, I suggest if you have any blurriness in your screen, these are recorded in high definition. You can go down to your right-hand corner of your screen under Settings and click on the 720p. And that will put you into the high definition, and as long as your internet can take it, you'll have a nice sharp screen to look at here. Anyway, thank you for joining us. Again, it's Stefan at tradingcandles.com. Please come visit us on our website, and have a good night. Thank you.